Hey there, okay, so now up to video number 30, and this will be video number 14 of module 2. And in this module we're going to be talking about the MACD, and the MACD is a moving average convergence divergence indicator. Alright, there are two MACD indicators that you can use. One is actually referred to as the MACD, as you can see here in capital letters, and there's also one in the custom indicators as well called the MACD. The only difference between those two MACDs, ignore this one for the moment, this is IMACD, just concentrate on that MACD there. The only difference between those two is go ahead and apply those to the chart. Okay, leave all of these settings as they are. You can leave the colors as they are as well, but I think you might want to change the silver over to maybe a black so you can actually see it. Okay, and the other one, if we place that on there as well and drop it on the chart, go to the colors and let's change that to black so we can see it. That's all the difference really is. So it's completely up to you. If you like to have the figure bars, you can choose the one from the custom indicators, or if you want the one with the smaller bars, you can choose that. But again, on the same note, is you can just change the thickness, so they're pretty much identical. Alright, so I'm going to delete that one for the moment and just use the one from the main indicators list. Okay, I'm going to leave some of the nitty-gritty until later in the videos, where I'm going to show you things like the power trade and the MACD breakout and stuff like that. I'm going to show you those in later modules when we get to using combinations of different strategies and indicators together. Okay, so but this briefly, for the most part, here's what you really need to understand. When you have the histogram here that you depict by the black lines here, black horizontal lines, again we have the 0,0 line here, which is also referred to as the vertical scale. Alright, we have the histogram, we've got a bottom part of the histogram, and we have the top part of the histogram. The bottom part of the histogram is to indicate that you're in selling territory, and anything when you see the bars above the 0,0 line, we're now in buying territory. Now, one of the rule of thumbs that you can use to actually go ahead and predict a buy or sell opportunity is the histogram crossover. Okay, and that's where you see the histogram in the positive area of the MACD that then transverses into a lower value on the histogram. So it goes from positive into negative, and at that particular point on the next bar, let's just zoom in so you can see what we're talking about here. Here we can see that it's gone from positive into negative, and that will be your sell trade. Alright, that'll be your sell notification. And then when it changes again from negative to positive, you close a trade and go long. Now, it doesn't always work like that. Now, you see these two indicators that I'm about to show you. You see this one here, the MACD example? Well, that actually works based on basically when the histogram goes into negative territory for the first time. When it's switched from positive into negative, it goes short. That's what this expert advisor does, that trades on its own. And then it will close the sell trade, then it will go long here. And then when eventually it gets to here, it will close that sell trade. I can tell you right now, that does not work. That does not work. But it does make open and close trades from time to time, but it's not always profitable. So I would ignore that particular public rule of thumb that's basically tells you how to use that as a signal, but don't, because it doesn't always work out. And you can see from this instance here where it's asking us to go short, and the currency pair doesn't really go down that much. Alright, and then it goes back into positive territory here, and that would have been a bad trade for us. Alright, and here if we'd gone long right there and came out here, we would have actually lost from that. Alright, so best bet is not to use those type of signals. To find a buy signal is really to wait for one sequence to end and for a new one to begin. Like for instance, if this currency pair is going up like it is, and then you see a buy signal, I would ask you to wait. and then wait for an opposite signal to come in to begin a new sequence of signals, because you don't really want to get in halfway through. You should really wait for the signals to finish. And the one way to work that out is by seeing when the red dotted dashed line. Now the red dotted dashed line is your signal line, alright, and this is the one where it's basically telling you to go long or to go short, and when is what we need to work out. Alright, so when it exits out of the histogram here, it's time to go short. Okay, now you might get it confused sometimes when you might see the histogram here and then go short, but it doesn't go short for quite some time. It takes a while. So I mean, I don't really like this particular indicator. I like to use the iMACD that we will show you a little bit later on. It's a lot more precise. But here is I'm just trying to find some areas that we can work from. Okay, so here is an area here. It exits out of the histogram, then you go short, and then when it exits out of here, you then close that short trade. Alright, but you don't want to go long there. Alright, you now wait for a new sequence, and a new sequence comes in when you see the red dotted dashed line go above. Okay, and then you start to go long from there. But it's not a really great indicator to work off. It does give off a lot of false signals. Another way that you could work out is divergences and convergences. Like we can take it from one peak here to there, and then we take another trendline tool out, and from the point where we drew the first area, which will be here, and then from there, so we take it from there to there on the candles, and you can see that the lines are actually going in opposite directions. And then what that means is basically that the market is converging. Essentially that this market is now oversold, and it's creating the bullish convergence. Okay, and eventually it will break off and it will go up higher. Conversely, we can do the same thing here as well. Let's see if we can find another area. Okay, here is a bearish divergence, and we can see that from one peak to the next the line's coming down, and we take it from this peak to that peak, which is where we drew it. Is peak number 1, that's peak number 1, peak number 2, peak number 2. So we've drawn it from there, and you can see that they're actually repelling away from each other. Okay, and when they repel away from each other like that, it's to let you know that the market is overbought, and then the market's going to reverse to correct itself, and it will come back to the next support levels. Okay, and then you basically go short. But how can you go short? Well, what we can do is, once we've drawn this line, we can then take a trend line tool out and then take the breakout, and here is the first signal, and get on the next bar and go short and then target the support line. Alright, and conversely with buy trades as well. You know, you target the resistance line for your take profit. Alright, so yeah, so that's the MACD indicator. So really play around with this and just say to yourself, okay, well, where should we start creating the buyers and sell signals? Well, I would personally wait until the signal line enters into the histogram for the first time, okay, and then go short, and then wait for an exit to come out. So we go in short here and exit there. Alright, now you're not going to have perfect trade after perfect trade after perfect trade all the time. Okay, so let's go back quite a way back. Let's do some simulations to see what would actually happen if we did it based on this way. Alright, so here we have a signal line. It's going up to approach the 0-0 line, then it starts to cross back into this negative territory, and it starts biting into the histogram, and eventually the market starts to come down. Now when you start seeing that this still bites into the histogram, it's an indication to stay in the trade, okay, and only exit the trade when the signal line exits out of it. Now this has been exited from a sell trade, so we've gone from here to there, and now we need to wait. Okay, then we buy and go long when it digs into the histogram here, and then exit when it comes out of here. Now you can see that this is on the 4-hour time frame. If we get in there and then exit out of there, we probably have only made a small gain anyway. But having saying that, we also need to say to ourselves, are we again on a support or resistance line when the buy or sell signals come in? So here is the buy signal, and the buy signal happens around about here. Okay, now we need to say to ourselves, we don't take buy signals on resistance levels, we ignore it. Okay, this is how we filter out the trades. So here is a bad one. Alright, and here is a sell signal here, and this happens right on the resistance level, so that one worked out a lot better for us. Alright, let's move along. Let's just take that line out. Okay, moving along, and here is a sell trade opportunity right there. So, okay, here's a sell trade opportunity, so rather than using the new order button to go short on, let's find out if we are really in the right area to go short on. So, there is our short signal. Boom, and we're sitting on a support level. We don't want that. We only want to have a short signal when we're a little bit below it. Alright, so that's not going to be no good. And here we can see a buy signal happening right here. Okay, and we can say to ourselves, well, should we buy this trade right now? Okay, well, let's take a look. Here is the buy signal right here. Is there any immediate resistance? Yes, there's some right here, so we can target that as our take profit. And it does it in that same bar, or within 2 bars. Okay, so play around with that for a little while, alright, and work off like maybe the 1 hour or the 4 hour time frames. Play around with it maybe for 1 or 2 days, no more than 2 days. Alright, just to get a feel of it, and then later on in the modules to come, in module 3, I'll show you a different indicator that will make a whole load more sense, and to show you how you can actually make some real good PPTs out of it. Alright, so until then, I will see you very soon in the next video. Bye for now.